Hey everyone, welcome back to the channel. Today we're diving into YieldMax Ultra Option Income Strategy ETF, that's ULTY. I'm going to give you a quick fact-checked update on how this high yield option selling ETF has been performing lately, what you need to know about its dividends expense ratio, which is going to be very important, and whether it might fit into your portfolio today. Let's get into it. First of all, let me introduce myself. My name is Wes. If you like passive income, then you're going to love this channel. For a year now, I've been looking for the best ways to earn passive income in the stock market and cryptocurrency. So let's get right into ULTI. First, what exactly is ULTY? Well, it's an actively managed ETF that uses covered call and option income strategies on US stocks to generate weekly income for shareholders. That means it writes options on underlying stocks, collects premiums, and distributes that income as dividends every week. Now let's talk about the updates. One key update that I'm not a fan of is the expense ratio. ULTY recently increased its expense ratio from 0.99% to 1.3%. This bump reflects the added complexity and management needed to run its options-based approach. So keep in mind the costs when evaluating your returns. Now let's talk about the dividends. That's the main reason many investors consider ULTY. It pays out weekly dividends almost every Friday, and recently these have been climbing. For example, on July 17th, 2025 here, ULTY paid out approximately 10.35 cents per share, which was the highest payment in about 9 weeks. If we take a look at the other payments, they have been rising in the last few weeks from 9.23 to 9.52, 9.60, and then it bumped all the way up to 10.35. And this current one that's getting payable on 7/25, which is tomorrow, is 10.29% or 10.29 cents. Not too shabby. Here's an important detail about ULTY's dividends. They're currently 100% classified as return of capital. That means you're not paying income tax on these distributions immediately. Instead, distributions reduce your cost basis in the shares, deferring taxes until you sell. It's a useful feature for tax-deferred accounts like IRAs, but something to track carefully. Now on to the fund size. ULTY has grown significantly, climbing from $664 million in February to over $1.6 billion in assets just last week. The number of shares outstanding has roughly doubled over the last 7 months, showing real investor interest despite its price volatility. Speaking of price, ULTY has had a rough start to 2025, plunging from over $12 a share down to lows near $5.75, like I have posted here. But over the last month, the price has stabilized and bounced back around 3 to 3.5%, currently trading near $6.30. It's actually at $6.23 today. Crunching the numbers, if you bought shares back around late April, near $5.76, your price is now above or about 11% higher. And you've collected almost 26% in dividends over 4 months. That's a total return approaching 38% at the current dividend rate of roughly 9.5 cents per week. You could theoretically recover your initial investment in about 67 weeks, assuming similar payouts continue. But remember, ULTY isn't risk-free. The option strategy can have NAV erosion, and the portfolio is concentrated in 15 to 30 higher volatile stocks. Also, the sustainability of these weekly dividends depends heavily on markets and option premiums staying favorable. Is ULTY a good investment? I am invested in ULTY. It is a small part of my portfolio. This is not financial advice. Thank you for watching my video today, and I will cover more passive income opportunities like this in the future. As always, thank you for watching and have a great day.